Hey, Smart Silver Stacker here. Hope you're doing well. The price of silver has arrived at a critical junction and it is on the verge of a major breakout. At least that is what it appears to be the case when you look at the silver chart. I'm going to show you what I'm talking about here in today's video. Now, when you examine this chart, it may also indicate that silver may have a precipitous drop, but I think that that is very unlikely, and there are a number of factors which contribute to my view that breakout to the upside is much more likely, and we're going to get into those in today's video. If you do want to get your hands on some metal, some of my favorite metal, silver bullion, make sure you check out today's video sponsor, sdbullion.com. There's a link down in the description below, and right now, new stackers can get gold or silver at spot by visiting sdbullion.com/new. And if you're tuning in today, I do just want to say a big thank you for checking out this live stream. Hello. Please do thumbs up the video, help get this information out into the algorithm. And I will be taking a look at the chat today. So if anybody has any questions or anything they'd like me to cover in the video, please do let me know. Now let's get right into these charts. Now this is a chart I noticed from First Majestic Silver. They posted it on their Twitter feed, and it's actually from Crescat Capital, the Tavi Costa partner over there. So this is some technical analysis on their part, and it shows the long-term silver price chart and how it's coming up against this very, very long-term level of resistance. If you draw a line from the peak back in 2011 down to the price today, you can see that line there. We are butting right up against that. And I thought that was very interesting, but especially in light of this chart. Now, this is one that I kind of put together on TradingView for you, but I had covered recently Clive Mond. He's a technical analyst who covers the precious metals pretty extensively, had discussed the formation of a cup and handle in the long-term silver chart. And you can see that that kind of coincides with this long-term downward trend line from the previous chart. And it actually forms part of the handle, the downward trend line does, which silver has been bouncing around within the confines of that downward sloping handle for some time now. Now, both of these significantly bullish patterns, if you ask me. The downward trend line, if we break above that, of course, that resistance that silver has been butting up against on the long term there will become support for the metal, and we could see silver take off potentially to new all-time highs. And also the cup and handle chart, the cup and handle formation on the silver chart here, also a very bullish formation on any technical chart. And what we would need to see to confirm a breakout from this is that silver would close above the upward bounds of the downward sloping handle here. So, if we get much more of a move up in the price of silver from where it's at right now, it could kick off a huge melt up in the price of silver. And of course, a lot of stackers have mixed feelings about that. I myself, I kind of like it when silver stays down because it means I can accumulate more of the stuff. But listen, the reason that we've been stacking for so long is because we knew that the system is rigged and the price is tremendously below what one might consider a fair market value, and that eventually a big breakout to the upside is coming. So, maybe this is it. Maybe this is a sign that we are at that moment. And I think that, when you examine this chart, which you can check out over at Twitter, or X now, I suppose it's called, on my page at Stack Smarter, where you can follow me as well. I posted this there if you want to take a look at this chart yourself. But I want to go over some of the reasons today why I think we may be on the verge of a breakout above this. And it's going to take a major event. I want to be clear about that. I do believe it will take a major event in the global economy to cause silver to break out of its, long downward trend since the 2011 high, to break above this line and maybe go to new all-time highs. Now, how high could that be? Who knows? I mean, if you adjust the previous all-time high from 1980 for inflation, that gives you around $200 silver as the real all-time high. So it could be a very big breakout indeed. But let's talk about why right now silver is kind of ideally poised for a tremendous run up, and why there are all these factors brewing behind the scenes, any one of which could trigger a massive breakout in the price of silver. Um, Douglas Murray says, not sure how the downward trending chart would indicate a breakout or upward trending turn about to occur. Well, if we break out above this line, it is a critical downward sloping line, it's resistance. If we break through that, then there won't be much resistance above that. I mean, that's kind of the point. So yes, that line has served as resistance. Every time silver has hit it, it has bounced off. But that means if we move above it, then a lot of buying pressure could be unleashed. Now, the first thing I want to talk about, a number of factors here that could drive the price of silver higher, is the possibility of the end of the petrodollar. That's one that we've covered extensively on this channel recently, but that is one thing that I think really could send the price of the precious metals, and silver included, to the moon, and that is Saudi Arabia accepting non-dollar payments for their oil exports. And we have a new development on this. This is very interesting. This is a Council on Foreign Relations piece that was published today. Some global memos surrounding the BRICS Summit 2023 and about them seeking an alternate world order. And don't worry, this video is not going to focus extensively on the BRICS meeting. I've covered that extensively, but this is really one of the current factors that could put a tremendous amount of upward pressure on the precious metals. Saudi Arabia now is joining BRICS along with the UAE and Iran. The UAE has already sold oil for Indian rupee, so many are speculating that it's only a matter of time before the Saudis accept yuan or gold or some non-dollar currency that would, knock the bottom out of the dollar. And then as the precious metals often trade inverse to the price or the US dollar index chart because they're priced in dollars, could be the event that catalyzes a huge move up. And in this memo, I just wanted to read a small part of this to you. So the CFR says the slew of applications to join the BRICS is clearly a symptom of a deeper malaise. The West's proclivity to deploy unilateral financial sanctions, abuse international payment mechanisms, renege on climate finance commitments, and accord scant respect to food security and health imperatives of the global South during the pandemic are only some of the elements responsible for the growing disenchantment with the prevailing international system. And then they go on to talk about the BRICS currency here, and they say another important aspect will be how these partners tap into the new systems of cooperation that the BRICS have been attempting to set up. Hype about a common BRICS currency might be impractical and premature, but trading in national currencies is becoming a reality. The recent rupee-designated oil transaction between India and the United Arab Emirates is not merely a swipe at the petrodollar arrangement that has prevailed since 1973. It is also a signal that the world's major commodity exporters and importers can try to reduce their dependence on the dollar. If not a new world order, the BRICS expansion is certainly a attempt at an alternative world order, one with a more sympathetic ear for the developing many versus the developed few. And so what they're telling us there is that they believe that this de-dollarization trend among the global South will continue, and why wouldn't it? DR in the chat there says, so Bidenomics is not working out. Yeah, well, check out my video from the other day on Bidenomics if you want to hear me talk extensively about that. I won't subject you to that today. But the de-dollarization among the BRICS nations is a real thing. And, the BRICS nations produce a huge amount of commodities. China, number one producer of gold in the world. Russia, number two producer of gold in the world. South Africa, number one producer of platinum. They make a lot of those platinum group metals down there. They command a lot of the world's commodities. And now that Saudi Arabia, the UAE, and Iran are joining, they're going to be a huge energy powerhouse as well. And so currently, global markets are denominated in dollars. All of these commodities get traded in dollars, and that creates this huge synthetic demand abroad for dollars. It allows us to export a lot of our inflation. It allows us to sell a lot of our debt to these commodity exporting countries that have petrodollar and dollar-denominated commodity profits that they reinvest into U.S. treasuries. That helps keep rates down here in the U.S. It lets us borrow a lot, something which we're going to need in the near future because, we're running some of the biggest deficits in history. I talked yesterday in the live stream about how if you annualize the increase in the deficit over the past 30 days, it comes out to almost like a $2.8 trillion annual deficit if you were to run the kind of deficits we've been running over the past month. And so, at the same time, all these countries around the world are going to need less dollars, need less treasuries. We're trying to sell them more. This is not a good formula. This is a formula for, a debt crisis here in the US. And that's why I say the Saudis dumping the petrodollar could be the thing that sends silver to the moon. And this is an interesting story from China Daily, just to touch on real quick. Saudis, as part of their Vision 2030 program, they're trying to get 4 million Chinese tourists annually to Saudi Arabia. And, I've talked a lot about how China is Saudi Arabia's #1 trading partner. They're the biggest purchaser of Saudi oil. Saudi Arabia imports a ton of stuff from them, whereas Saudi trade with the West and with the US has diminished significantly over the past 10 years. So this just goes to show that the countries are deepening their ties on all sorts of fronts. They're using Chinese investment to try to diversify their economy. They are courting the Chinese people as tourists. And this is the way of the future. Saudi Arabia has found new partners, and I think that they are going to abandon their strategic partnership with the US in the relatively near future. They're going to be officially joining BRICS on January 1st. And, none of this is guaranteed. But again, this, if it were to occur, and it's not like a black swan, I mean, we can see this coming. It's been discussed extensively. Even in the mainstream media, they've talked about this. And if it happens, I think people are kind of ignorant as to what the consequences of that could be for the dollar. What else? What else could drive the price of silver up? Well, I mentioned debt crisis. If the Saudis dump the petrodollar, we also have our own problems here domestically. This is a report from Bloomberg from yesterday about how the Federal Reserve has ramped up demands for corrective action by regional banks. And if you read this article, it kind of goes into detail about how they're seeing liquidity problems at these regional banks. The rules for how they keep their books at regional banks are different than the mega banks. They have these assets on their books, these low-yielding treasury notes. Fortune reported back in March that it was about $1.7 trillion worth of losses that these banks were sitting on, because as interest rates have risen, these low-yielding bonds have declined in value. And so the regional banks haven't had to mark this on their balance sheet, whereas the mega banks would have had to do that. And that's exactly what you saw happen at SVB, was their books looked okay, but then when they were actually forced to realize some of these losses, the depositors panicked and pulled all their money out and the bank collapsed. Well, now we are beginning to see signs that there are other regional banks affected. That is why the Fed is forcing them to take these corrective actions. And it's very interesting in this article that they mentioned that similar corrective actions were pursued at Silicon Valley Bank in 2022, but obviously those didn't work out. They have these things called MRAs, which are, trying to find the mention of it here in the article, but they're these matters requiring attention and matters requiring immediate attention. And they've been issuing these for these banks. And again, they did this to SVB in 2022, but the bank still collapsed. So is this a sign of things to come in the regional banking sector? And, if we get a collapse in the banking sector, the collapse itself is not going to drive silver higher, but the Fed reaction very well could, that you could see the Fed going into emergency intervention, possibly taking some of these bonds onto their own balance sheet, these low-yielding bonds that the banks are sitting on. And, that's basically just debt monetization. It's just QE in another form. They probably won't call it QE, but that's what it'll be. We already saw them do this with the Bank Term Funding Program, where they took these things temporarily onto their balance sheet as collateral for loans, and they took them at face value so that the banks didn't have to see the losses. But if they have to do this to the tune of $1.7 trillion, or more, who knows how deep this rabbit hole goes? Well, that's going to blow up the price of the precious metals. You can guarantee that. In fact, at this point, I think any sign of the Fed confirming any kind of reversal or easing or anything like that could well send the metals much higher. But if the banks collapse, the intervention will be massive and it will send it very, very high. Of course, none of this is financial advice. I'm just telling you how I see this playing out. But it's like when you see that chart that I pointed out there earlier that shows silver has arrived at this critical juncture, and you compare that to all of these events going on in the economy and the world, you see how the possibility for a massive breakout is really there and for a massive devaluation of the dollar. And I also do want to point out that, I talked about how this chart, if it fails, if that cup and handle pattern fails, or if we bounce off of that resistance, you could see a decline in the price of silver. And if the banking system fails or we get some kind of deflationary collapse, you may well see the spot price, at least of the precious metals, collapsing. That is until the Fed intervenes, reverses policy, etc., which I don't think will take long. So, I mean, even if a big spike up is presaged by a decline, I will just view that decline as a buying opportunity. But I don't really even think that that's that likely at this point. Let's see. According to Market Watch here, quoting JP Morgan analysts, these new liquidity rules being imposed on the banks may see earnings taking a 1.3% hit in 2024 for these 6 regional banks. So that is not a good sign for these banks. They will need to maintain higher liquidity levels, which even if it doesn't put too much pressure on the system, their earnings are going to suffer as a result. And these are banks that are already stressed. So it's not like the Fed has a magic wand here where they can just up the liquidity requirements and there's no consequences, because otherwise, I mean, of course, why wouldn't they just do that? It will have a significant impact ultimately on the earnings of these banks. So that's not a good thing. Maybe that's why Warren Buffett just sold $8 billion worth of stock. So technically, I think he sold 13 billion, but he bought 5. So the net purchases or net sales from Berkshire Hathaway now $8 billion. So what does Warren Buffett see coming? Why is he sitting on this pile of cash? Does he see a major decline on the way? Well, possibly, but again, I would view that as a buying opportunity for me in silver. Buffett, not a huge fan of metals, although he has gotten in there before, and he's even bought physical metal in the past, but he's closed out those positions fairly shortly. He says he's not a big fan of gold, although did initiate that position in Barrick gold fairly recently, although I think they may have closed out of that as well. But the point is, Buffett sees something coming here, and he has sold off a huge position. So we certainly are on the verge of something here. Now, let's say that the global economy and de-dollarization doesn't destroy the dollar and blow up the price of silver. It is very likely that an escalation in conflict around the world may do that. I mean, we've already talked extensively about how warfare, is one of the most inflationary things a country can embark on because it destroys resources. You make all this stuff and you just blow it up. So it doesn't create like a surplus of goods and services, and also all this money is spent on it, and you've typically got to finance that with debt and borrowing, very inflationary. We're seeing that in the huge deficits that we're running. Part of that is all of the weapons that are going into Ukraine. But if NATO gets drawn in, or if that conflict escalates, then that very well could cause a huge move up in the price of gold and silver. We're one headline away from that, I think. NATO getting involved, tactical nuclear weapons being deployed. I mean, who knows? I mean, I hope that that's not the case. But if it does occur, you got to look at this stuff objectively. I think that there will be a huge reaction. You'll probably see panic buying in the stores, and the metals, for their safe haven status, will be bid up. We're continuing to see this conflict escalate. I'm not a military guy, so I know this is a contentious issue, but we do see Ukraine increasing these drone attacks into Russian territory. They've got the counter-offensive going on right now, which, depending on the source you look at, is either doing okay or failing miserably. Again, I don't know. I'm not a military analyst, but one thing that I think we can say clearly here is this conflict is not de-escalating, and that's the important thing. And eventually, I believe NATO is going to get drawn into this conflict, and when they do, it's going to become a whole lot more inflationary, and it's going to change the global economy in the sense that investors will realize the true nature of this event. Of course, it's not just in Ukraine. We've got ample hotspots around the world. You've got the Korean Peninsula, always on the verge of conflict, seemingly these days, maybe nuclear conflict, according to Kim there. We've got the South China Sea and Taiwan, a potential hotbed, that continuing to escalate. But now it's looking like Africa really becoming a hotspot for these proxy conflicts. And it's really just evolving there. We've got the military junta in Niger expelling the French ambassador from their country. Of course, you've got this junta, which appears to be aligned with the Russian bloc of things. And, we may see some military intervention there. I'm sure that there's already funding, training a proxy army there, something going on beneath the mainstream media coverage. But that is turning into a hotbed. And not just that, but we just saw Gabon go through a military coup. I think, yesterday? They had a coup there. And yet, DR points out that China has bases in mineral contracts in Africa. Certainly, part of China's Belt and Road Initiative has been to move into Africa and try to gain a foothold there. Russia, too, they've got a Wagner Group operating inside of parts of Africa, possibly helping that junta in Niger, the anti-G7, anti-West elements there. But the point is, the world is a hotbed right now. There's a lot of conflict brewing, and we're going through, the fourth turning. We're going through one of these game-changing events that happens every 80 years or so. If you go back 80 years ago, we were in the midst of World War II, 1943. You go back 80 years, we were in the midst of the Civil War, it's 1863. You go back 80 years, and it doesn't quite sync up, but, you got the American Revolution there. So, yeah, we're going through a fourth turning. Check out the generational theory of Strauss and Howe. This is the time when the global economy, the global order gets turned upside down. And if you want to carry wealth over to the other side, one of the best vehicles for doing that, time-tested, survived every fourth turning so far. If you had silver coins back during the Civil War, or back during World War II, or back during the Revolutionary War, they're still worth money. Probably worth a lot more money today than they were back then because they're so old and collectible. But, bring a paper currency from those times. Bring a greenback from the Civil War. Bring some of that colonial script money that they were financing the Revolutionary War with. Even, dollars from World War II have lost a huge amount of their purchasing power, and the other ones aren't even currencies anymore. But gold and silver, these are the type of assets that can carry wealth over to another financial paradigm. Dropping to Mike says, maybe I'll win that monster box this year. Yeah, go to sdboyan.com/sweepstakes. You can sign up for your chance to win a monster box of Silver Eagles. Definitely. Someone wins one of those every year. Pretty amazing. It's a pretty nice thing to win if you're a stacker. It'll bring your dollar cost average down pretty significantly if you win a 500 Silver Eagles, right? But so, we'll have to keep an eye on this silver price chart moving forward. Are we going to get a breakout? Well, keep an eye on it. We've had a pretty decent move up over the past couple of days in the price of silver on some weak economic news out of the U.S. And if that persists, that move up very well could catapult silver on this, from a technical standpoint, to a major rally. And I do think that is right around the corner. Look, folks, silver in 1980 hit $50. You can't find almost any other commodity right now that is trading below its highs from the 1980s. It doesn't exist. If you adjust that level for inflation, it would put the high for silver at $200. Are we going to go that high? I don't know. Sometimes I get these comments on the videos that say silver will never hit $200. It's like, well, silver's guaranteed to hit $200 someday, unless you just think that the US dollar in its current form is going to exist in perpetuity. But, that's the crazy perspective, right? But there's a lot of normalcy bias out there. I don't know. I guess we should be thankful for it if we're stacking, because the fact that people haven't caught on yet, that's why we can still get hard assets for so cheap. So, I'm happy for that. But the sale price on precious metals may be over very soon. So, I don't know. I'm probably going to stack some more. Let me know what you think in the comments down below, folks. Thanks for tuning in. Don't forget to like, comment, subscribe, tell your friends, and I will catch you next time. Smart Silver Stacker.